You want a secret story here, I'll give you one. The former Secretary of Energy of America, I had a discussion with him, and he is very worried about exactly what we're talking about.
Hey friends, thanks so much for tuning in. I'm very excited to have on the line Marin Katusa. He's the chairman of Katusa Research and author of the New York Times best-selling book, The Colder War, How the Global Energy Trade Slipped from America's Grasp. And he's here to talk about all things energy, gold, economics, and more. Marin, how are you?
I'm doing well, thank you.
Hey, thanks so much for joining us. I very much appreciate it. And I want to kick this thing off by talking about energy, and then we're going to bridge into gold, guys, because of course, as all our listeners know, gold and silver in physical form represent energy. You trade your energy, you trade your labor for real money. Marin, I wanted to ask you, as it relates to your book, The Colder War, How the Global Energy Trade Slipped from America's Grasp, as we've seen the price of oil plummet in 2016, of course it's recovered a bit now. It's absolutely devastated the shale gas sector in the United States. How do you think that is going to play out in terms of U.S. energy needs and energy production in the years to come?
Well, the production hasn't been slaughtered. So let's make a few clarifications here. So then the natural gas production is staying very strong in the U.S. So yes, there's a third of the drill rigs that there were 3 years ago. But remember, innovation through necessity. So the drill rigs are drilling much faster. They're doing much quicker fracs. So they're getting it down to their sources. So you look at the Generation 4 rigs are much more efficient than the G2s or G3s. So the production in the gas is staying solid, but you're looking at what has been affected is the number of high-paying jobs, tens of thousands of very high-paying jobs in the $150,000+ range have been affected. And the spillover effect of the oil patch being, with exploration and drilling being affected, that comes into the automobiles, the housing, and the general retail economy. Now, eventually, you're going to have to bring back those workers to catalyze the drilling, because yes, they're drilling much fewer wells, but the production has been holding quite strong actually, and because of the technology improvements and the cost reductions, that's been the savior to the production. But there's been a huge effect on employment in the oil patch. And it's not just in the US. You look at Canada and Alberta, and you look at other parts globally. So it's got a huge effect on the economy in the US.
Do you think that there is a quiet war waging in the background between the United States government and the House of Saud, the Saudis, as it relates to the future of the petrodollar? The Saudis had threatened to sell their treasuries if the 28 pages of the 9/11 report were released. We've heard rumors that the House of Saud is paying contractors in IOUs. Give us your geopolitical overview of the relationship of the petrodollar and the U.S. government with the House of Saud. Clearly, it's an important relationship, and it seems to be deteriorating. What's your view?
Well, in my book, that's one of the most popular questions. I got a chapter called The Shaky House of Saud, and I really think the Crown Prince is doing some fascinating, brilliant moves that he should be doing for Saudi Arabia. The new Saudi Crown Prince is going to have the effect on Saudi Arabia that Vladimir Putin's had on Russia. This is a guy to watch. He's young, he's smart, he's aggressive, and he has power. So he's doing all the right things right now for Saudi Arabia. Now let's talk about where America's at. During the 9/11 time, the Saudi Arabia had much more influence over the petrodollar than they do today, because of the debt of the American government's gone much, much higher since 9/11. So that's the other factor to really consider. So the Americans have almost diluted the power the Saudis have had. So the Americans have been playing also a bit of a dirty game with the Saudis. So where does this all leave? Well, I think that the central bankers and the people, people talk about who's in control of the global economy. They talk about the central bankers, the G7, the meetings behind the closed doors. They are scared of Donald Trump because Hillary's part of the establishment.
Right.
But Donald Trump does not play to their rules. He does not play to the secret central banker's agenda. Now, That is the biggest wild card here is the Trump trade. And we can talk about what I think is going to be the biggest Trump trade here. But Donald's big mantra is he wants to make America great. And I believe that there's a lot of closet Trump fans that don't want to talk about it publicly, but during the election, they may come out. So there's a huge fortune to be made in the Trump trade here. Well, what does this all mean? Regardless of whether it's Hillary or Trump that wins, there's a few factors that are going. America's oil patch is real. The shale revolution is real. America's potential in oil production and natural gas production can compete with OPEC and the Russians. Remember, the Russians are a major oil producer and a major natural gas producer. So you have to understand the major geopolitics here. And if it's done right, America can domestically produce enough to really have geopolitical leverage against OPEC, against Russia, rather than importing oil. Unfortunately, because of the crash in oil prices, the imports of OPEC oil, Saudi oil, has increased in the U.S. in the last 24 months. They can change that. Technology is getting better, and I think you'll see America's production increase again because at $50 oil, remember, $50 oil today is $80 oil just a few years ago because of the increase and decrease in costs in the production and because of the increase in technology.
Well, it's very interesting that you mentioned the Trump trade, and I want you to flush that out a little bit for us. One bit of commentary I'd like to add to this is that I think you're probably right that there are some closet Trump fans, because unless you're a member of the Council on Foreign Relations and one of these highly paid mainstream mockingbird media professionals who get paid millions of dollars to essentially spew government talking points to us, you probably don't care much for Hillary, because if you're honest about what her past has been and you're honest about the fact that the FBI seems ready to indict her, except for the DOJ is standing in the way of that, she really is not even fit to be running for president. So we'll see how that plays out. But as it pertains to Trump trying to make America great again, what is the Trump trade? How do we make money if Trump gets into office?
Well, I'll tell you what guys in power are telling me. I'll tell you about a private conversation that I haven't talked about, and you want a secret story here, I'll give you one. The former Secretary of Energy of America, I had a discussion with him, and he is very worried about exactly what we're talking about. The domestic security of resources for America. Just recently, this past week, there was a conference, invite only, of the largest family offices, so the wealthiest people on the planet. Rather than giving their money to fund managers, they've realized that, wait a second, these fund managers are interested in their own fees, not our best interests. So a lot of the most powerful family offices have gotten together and are looking for the new angles. And I was asked to speak with this group, and what is really the behind the scenes. These are things that you'll never read in the Wall Street Journal. What they're excited about is contrarian investments. And, the conclusion was there's a huge Trump trade here, but regardless whether it's Hillary or Trump, the two best ways to play this, not just in my opinion, but the Secretary of Energy, former Secretary of Energy of America, and some of the largest family offices, is gold and uranium. That's what they're talking about. So that's pretty interesting when you have people who are worth billions of dollars and where they're putting their money. I have a long track record, a successful track record in the resource sector. That's what I'm doing with my money. So you want to put your money that isn't on the front page of the newspaper, because like you're talking about, the media is there with an agenda. You want to invest in something that's going to be on the front page of the newspaper, and along that way you sell to the masses. But you want to buy something that's not popular. You want to buy something that isn't on the radar of everybody, and then when it becomes popular and becomes on the radar of everybody, you sell at a massive profit.
All right, very interesting. What a perfect segue over to gold, because as we've been recounting here for several months, Marin, we've seen an absolute breakout in precious metals mining stocks. The GDX, the GDXJ have been absolutely on fire, and it speaks to the fact that smart money is getting into the precious metals sector, kind of covertly, because we're not seeing this talked about very much in the mainstream Mockingbird media. Is this a confirmed start of a gold market, of a gold bull market, in your opinion? Because some of the commentators out there that we trust and follow, like Jeff Nielsen from Bullion Bulls Canada, he believes it's a fake rally. He thinks it's a sucker's rally. He thinks it's not for real, and the bankers still have total control. My thesis is that's not correct if we take a look at what's going on with precious metals mining stocks. What's your take?
I think you got to look at three factors. Gold is a truth meter for the central bankers, and they don't want gold to take off because it's a true report card that they're failing. I think you got to look for the gold market to truly take off. You need gold to be performing better than every other currency combined in all currency terms. And you have to look at the stocks. So what's interesting right now is the gold stocks are doing well, but yet there's this divergence between the share prices of these gold companies and the actual spot price of gold. So we're not seeing them both in unison. So, I don't know if we've seen the worst here yet, but my style of investing is it really doesn't matter, because if you buy the most undervalued, best management teams, and again, the key factor in the resource sector is investing with the best people. You can have a great gold deposit. All these people talk about this project or exploration or production, but the most valuable asset in any one of these companies is the people running the company. In more so in resources than any other sector, because of the volatility, because of the risk, because of the complexity of mining. It's a very, very tough business. So make sure that whatever you're doing, start with the people in the business. That is more important than the deposits, because average people will screw up great deposits, but great people will find and own amazing deposits.
Well, Marin, I hope that you'll share at least a few of those specific names with us before we lose you, if you're willing. But let me ask you this. As it pertains to precious metals, our friend Steve St. Angelo from SRS Rocco has written, and I think he's on point here, gold and silver are more than money today because of the 40-plus year funneling of investors' funds away from real assets and into paper claims on future economic activity. And I think that speaks to exactly what you were just talking about as it relates to those wealthy families who no longer trust Wall Street wealth fund managers and who want to safeguard their own money by being contrarian.
Gold's used to be a contrarian investment, but it really is about wealth preservation. If you've lived in Russia for the last 3 years or Venezuela, and you have a percentage of your net worth in gold, you're doing much, much better than everyone else around you, because gold kind of holds its value. And in a negative interest rate world, and let's not fool ourselves here, we are in a new quantum realm of finance. We're not going to see high interest rates in North America or the Western world for a long time. So all these inflationists, they're out to lunch. So what you have to look at really is, how do I invest in a world drowning in debt, but the trend is your friend and negative interest rates are going to be here for a while, and gold has to be part of that portfolio. Now, it shouldn't be your whole portfolio. You need to have a diversified, you need some cash, you need some, and my favorite currency is also US dollars. So the gold bugs hate me because they say, well, how can you like gold and US dollar? Because those are the two best currencies in the world right now. And if you don't like, US dollars, that's fine, but I have one of the top performing funds in Canada in our sector over the last 7 years, and there's a reason why. And the US dollars have treated me very well in the last few years. So I think you need to have a matrix here where you're diversified, and gold should make up about 10% of your portfolio, in my opinion. So don't go all in on one stock. Don't bank your mortgage and your children's university fund on some dream of a company, but do your homework, invest in the right people. And that's what I've been doing. So, you look at some of the big names in the resource business, like Rick Rule or Doug Casey, guys who've been around for 30, 40 years. They know the best people in the business. That's why we've written $1 million checks backing what I believe are some of the best companies. Hell, why did JP Morgan come in? Why are the family offices recommending the same thing that we're talking about? And you back a guy like Amir Adnani that we are doing with our own money. And he was just selected at this private family office as one of the 3 best ways to invest in the resource sector. Well, there's a reason for that. So we've put money behind Brazil Resources Inc., BRI, on the Canadian exchange. He's got over 11 million ounces gold. To put things into perspective, he's in the top 7 companies of all of the publicly listed traded gold companies that are not producers. So right off the bat, that he's in the top 10 easily. And then you look at the market caps of everyone else and the potential of what he's doing. This is one of the most undervalued stories. And then you got this huge kicker for uranium. So if you're a Warren Buffett or a value investor and you're trying to understand the resource sector, this is a no-brainer. That's why we're there. That's why we're a reporting issuer, which means we own over 10% of the company, and everyone sees how much stock we own, how much we paid for it, and go long and strong. That's what I've done on this deal, and I haven't sold a single share in this financing because I believe it's going a lot higher. And I believe gold's going a lot higher. So this company is going to do much better than its peers. And you don't need to own 40 gold stocks. There's this big misconception. People follow 5 or 10 different newsletter writers and they have 20 companies each and they end up owning 100 stocks. How can you possibly stay on top of 100 stocks? You don't need that. You need 5 or 6 of the absolute best management teams with the best potential projects, and that should make up your gold portfolio. So that's what I focus on, is the best people. And that's where our money is. We're Doug Casey and Rick Rule. We're backing guys like Amir Adani with Brazil Resources Inc. And I think a major contrarian play is this other company, Uranium Energy Corp, UEC. There's a reason why some of the largest funds in the world, you take the Warren Buffett of Asia, Li Ka-shing. He's looking at exactly the same strategy going, I'm in Asia. I see there's a vulnerability in Asia, and I want exposure to North American assets. So if the richest man in China is thinking like us, we may want to pay attention to what probably, a guy who has great access to information on what's going on in China, if he's investing in these assets, you might want to pay attention to it. So, that's what I'm doing with my money. And I'm going to, it's been the same story I was saying for the last few years, and it's treated me well. So I'm going to continue with the trend as my friend.
Now, having mentioned Brazil Resources as a specific name, are there any other specific names, or could you give our listeners an idea or ideas of any ETFs that represent precious metals that you would feel confident?
I don't like ETFs. Okay. This is a big misconception in this market. People overpay on these ETFs, and ETFs are a basket. Well, I don't want a bunch of underperformers because some fund manager wants 2% of this company and 1.5% of this company and 16% of this company and 4.2% of this company. Nah, and people don't understand that the ETF and even buying gold, like in the, how do you know what it's buying paper thinking you're buying gold are two different things. So
that's right.
Be careful what you're buying.
Yeah, that's absolutely right, which leads me to my next question. What do you think is the significance of the development of the Shanghai Gold Exchange in your mind? And how will the move away from paper precious metals markets like the LBMA and the COMEX affect the prices of precious metals in physical form in the future? What do you think?
I think it's a huge issue. Where's the buying coming from? It's coming from Asia. You look at the central banks that are buying. Russia's buying, China's buying. The Indian retail is a huge part of the global demand for gold. So rather than coming through the U.S. and being manipulated by the U.S. traders, they're going to set up their own trade. And you know how like oil is traded in different, like you got the Brent oil and you got the WTI oil, you got the Saudi light. You have different prices. I see that eventually happening, not just with gold, but I see it happening with uranium. Uranium is going to be in the same situation because the Russians control almost half of the world's supply through Kazakhstan, their own, and then they're refining. And then you have the Western world uranium price. Why is it so far-fetched to think that it's going to happen with gold or uranium when it already happens with natural gas and uranium, and even look at electrical prices or LNG prices? So it's going to happen, and what they're doing is all of this is giving the power to the Asians to do what they need to do and what we've been taking for granted all these years.
Obviously, you believe that gold is a hedge against a worst-case scenario. It's also real money. What do you think of the hyperinflationary potential future of the U.S. dollar? I know you're a fan of the U.S. dollar. It's treated you well. But as we look at the enormous debt bubble of the U.S. government, $19 trillion in stated debt, what do you think is the future of the U.S. dollar as we see China and Russia move away from trading oil in dollars, as we see really the world start to move away from the petrodollar as the world's reserve currency, are you worried at all about the future of the dollar, say over the next 2, 5, 10 years?
Okay, well, we got to break that up. The risks within 2 years to 10 years are very, very different. We have to understand that the global debt, and you look at the emerging markets, the resource sector, it's in US dollars. And when the commodity markets crashed, the international emerging markets, they've had much fewer US dollars to fund their debt, which is in US dollars. So their debt just got way more expensive. So before the US dollar and what you're saying, this hyperinflationary scenario approaches the US market, we're going to have to go through Venezuela, Brazil. You're going to look through Russia, the emerging markets, Asia. The US dollar still has some time because it still is the strongest fiat currency. Now, going out 10 years is a very, very different risk profile. So longer term, I'm very bearish on the US dollar, but near term, I quite like the US dollar, and I have a lot of US dollars, so I'm quite happy with them. Okay. But I think the ultimate currency is gold, and 10 years out, you're going to sure wish you bought gold today.
Yeah, well, we certainly agree with you. And, the reason I bring it up is because of the hyperinflationary collapse and societal collapse we're seeing in Venezuela. It's really horrifying. And we worry that at some point in the future, like John Williams from Shadow Stats has predicted, a hyperinflationary collapse of the dollar, in his words, is now unavoidable. The question is, when does it come? Do you think there are any lessons that Americans can learn from what we see going on in Venezuela?
Venezuela is a very, very different thing. Look, Americans are so worried about, the standard of living in America is much, much better than Venezuela has been for years, okay? And America is a great place. Canada is a great place. The Western world's a great place. The reality is, I've been to over 100 countries, and you travel through these emerging markets, and most of them are shitholes, okay? That's just the reality of it. It's a corrupt political regime, and you look at Venezuela, had so much potential, but the reality is for years we saw this coming. It's the same thing in Brazil. It's so corrupt, and Mexico has the same issues moving forward. So yes, the hyperinflationary, we'll see it. It's kind of like death. We don't know it's coming. Hopefully we can't get as far down as we can because we still like what we have today. But I don't see it happen in the next couple of years. So be very weary of the hyperinflationists who are claiming it today. I think we got a few years about that, and we're seeing it right now in the gold market that it's not about the hyperinflationists. It's about negative interest rates. It's about the emerging market debt bubble that's going on, and it's about the big money. And we haven't even seen the big money even enter the gold market. This conference, this private invite only of the world's wealthiest family offices, is a huge telltale signal to me that they're just starting to talk about gold. They're just looking at how to play it best. And now they're looking at the best people, and they're coming to guys like me and going, "Okay, you've been doing this for 15 years. Help us find who's who in the zoo." Gold makes up such a small percentage of the overall global wealth matrix that if some of these funds just buy 1 or 2% gold, we're going to be looking at $2,000-3,000 per gold an ounce. So we've still got a huge run in gold to come.
Well, Marion, last question for you. Do you see the U.S. government ever regaining control of its economic outlook and returning to a gold standard?
Never. It ain't going to happen. I'll tell you why. That's the equivalent of going back to the horse and carriage. There is no way the governments can discipline themselves to stay on a gold standard. It ain't going to happen in my lifetime. But it doesn't matter. There's a fortune to be made here because the markets, the fund managers will go to where the money is. And once the street understands that we don't need go back to the gold market the way it once was, that ain't going to happen. But the markets, the private wealth funds, the sovereign wealth funds, the pension funds are going to realize that they have to have gold to preserve that. Gold used to have a negative carry, but with negative interest rates, you don't have that negative carry. So gold is in a better position than it's been in the last 40 years. So that is why I'm bullish on gold.
Well, Marin, thanks so much for your time. It's just been a real pleasure. And can you tell people how to find you online? Give us your website information and tell people more about your book and how they can find your book.
You bet. Well, you just come to my website, katusaresearch.com, and for your viewers, I'm about to publish something called The Trump Trade: How to Best Profit from the Coming Federal Election.
All right, excellent. We very much appreciate that. Guys, our guest has been Marin Katusa. He's the chairman of Katusa Research. And of course, you can check out his book, The Colder War: How the Global Energy Trade Slipped from America's Grasp. Marin, thanks so much for your time.
It was my pleasure.
Guys, thank you so much for listening, and thanks for tuning in to sgtreport.com for real news 24/7. I hope you have a wonderful week ahead. God bless.